Hello and welcome. You're tuned into Market Fatafat on ET Now. I'm Srishti Sharma and with me is Vinny Motiwala. And viewers, in the next 1 hour, we're going to be highlighting all the buzzers in trade right now. We will connect with our team of researchers as well as our technical expert in the show. But before that, Winnie, what a move on the markets, though we have scaled past that 24,500 mark. But the good part is that we are holding on comfortably above those levels.
Yeah, holding on comfortably around that mark, 24,500. And Shrishti, good afternoon to you as well. But, when you're looking at it, Nifty 24,500, sustaining like Shrishti is mentioning, up 9/10%, almost a percent, So, clearly that momentum seems to be going on. What's leading today is the Nifty IT. Any of the names, whether you look at an Infosys, TCS, TechM, L&T Technology Services, Birlasoft. So from large cap to mid cap ITs, all of them are buzzing in trade. Obviously TCS's numbers, good number that came in from there, and that's what's keeping all these stocks a buzz as well. We'll watch out for a lot of numbers next week from these IT companies, but surely an interesting move that's coming in there. Other than that, we have the media pack that is buzzing as well. So Nifty Media is also among the top sectoral gainer. What's not holding on to gains today is the realty pack, and that's what is down and out. So in the realty pack, we're seeing some bit of a subduedness that's coming in for some of the stocks like macrotech developers, Sobha, whether you look at a Phoenix Mills, all of them are a bit under pressure. But yes, all in all, markets overall are chirped up in trade. It will be seeming like at least it's going to be ending the Friday on a positive note. But Shrishti, at least 2 more hours to go before we see the market close. But 1% uptick as of now, quite good for the markets.
Well, certainly that Friday cheer is indeed, and it looks like that it's the happy ending maybe for the markets. But with this, viewers, let's move on and let's connect with our technical expert, that is Aamar Singh, joining us on the technical front, as well as from the research side we have Jinay as well as Gaurav with us. A very good afternoon to all three of you. But let me go ahead and highlight the first counter that is in focus, though the stock is not that big a mover in trade, but important commentary actually coming in from one of the key suppliers for Varun Beverages, and that is PepsiCo, wherein the chairman and the CEO of PepsiCo did mention that they continue to see a lot of growth in many parts of Africa as well as Asia, and particularly India is a big growth space for them and is an investment area. Now the opportunity is quite massive, and if they take a decade's perspective, they are putting into a lot of infrastructure on ground, investing in brands and so forth. So the strategy for India is quite good when we talk about the future. And PepsiCo also clocked a double-digit volume growth in the Indian beverages market in the June quarter that was gone by, and that's why we are highlighting this particular counter, though the stock is not that reactive in today's trading session, but indeed a positive commentary on the future outlook coming in from the key suppliers.
Absolutely keeping an eye out on that one. But let's move on and talk about Azad Engineering. This stock is locked in upper circuit today, 5% uptick, that is what it means. And why is the stock buzzing in trade? Why the upper circuit? Because they've received a 5-year international contract from Siemens Energy Global and Germany, which is the Germany-based company, and which manufactures and supplies critical rotating components for their global demand, and advanced gas and thermal turbine engines is what the contract is for. So yes, on the back of this contract win, 5-year contract which is they've received, Azad Engineering is buzzing in trade, and the stock has been buzzing for some time as well. A sharp jump up since you ever look at it since the IPO times of the company. A very good move that Azad Engineering seeing today, also managing to hold on to gains of almost 3% as of now. Yes, given up those upper circuit levels, but yes, keeping an eye on this one.
Alright, then let's move on and let's go to Amar to know his first counter, and indeed it is one of the IT counters, and that is KPIT Tech. Amar, tell us, how are you looking at the chart even after such a good move today?
A very good afternoon, and thank you for having me on the show. So IT is really stealing the move today on the back of TCS upside, and also major we are seeing in Infosys as well. KPIT Technologies also, what we are seeing is that it has breached its earlier zone of resistance. So that was somewhere around the 1700 and 1730, 1750 zone, which was acting as a very strong resistance. So that has been taken out. The stock is currently approaching the 1850 levels. And also what we see on the intermediate term trend is that some of the technical indicators, they have turned bullish post the stock trading and sustaining of the 1750 levels. And what we are seeing is that the last few trading sessions, and specifically on the day when it had rallied 28th of June, there was significant volume as compared to the average volumes. Today also the volumes are significantly higher. If I look at the long-term charts for this particular stock, it continues to remain strong and firm. So I would say one needs to be bullish on this stock. Stock sustaining above 1750, 1800 levels, the stock has a potential to rally towards the 2000 mark.
Keeping an eye out on KPIT Tech, but also, let me mark the flashes that are going on at the bottom of the screen, and I'll request my producer to just pull up Sterlite Tech. That's the one we are talking about, and now this is from agencies. They have crossed the milestone towards its global service business demerger. The approval from the shareholders is secure, both secured, unsecured creditors for the demerger is what they've received. Approval is paving the way for other shares of the new business to be listed separately. So yes, they've received that NCLT approval, which was for its global service demerger business, and seems like a bit of a chirp up that one could watch out for from Sterlite Tech today. On the back of this news flow, as of now, when you're looking at Sterlite Tech, I beg your pardon, is holding on to gains of 4.5%, a sharp spike up that one had seen once this announcement has come right now. So Shrishti, an interesting one today that we're keeping an eye out on a Sterlite Tech.
Well, indeed, what a great move on this particular counter. But with this, let's move on and let's go across to Gaurav then, and let's understand what's happening with Federal Bank. In the past couple of hours, we are seeing once again a good move in this counter. Gaurav, take us through the news flow.
Well, yes. Federal Bank is in focus, and the reason being that UBS has now upgraded the rating to buy and also hiked the target price to 250 rupees per share. What they believe is that the outlook is actually improving for the bank, and at the same time they are seeing favorable risk-reward ratio. There are two reasons which they have highlighted specifically. First is that they expect the ROA accretion by FY27. They are expecting ROA to reach around 1.4%, and this will be because of the improvement in NIMs and at the same time sustain the loan growth that we have seen in the bank. They also believe that the bank will accelerate the growth in unsecured loans and MSME to support the next leg of growth. And lastly, if we talk about any medium-term strategies also, it seems positive because they are expecting the announcement of the new CEO in the next 2 months, and that could bring some another lever for re-rating for the bank. When we talk about valuations, now implied valuation according to UBS comes to 1.5 times the FY26 price to book value, which is still trading at 26 to 60% at a discount to select peers, and that is why they are being a little bullish on this bank. When we look at the stock performance also, it is up almost by 2% in a day today. We already know that this bank has been performing very strongly. In YTD itself, this bank has been stronger than any other bank, and it seems that on the charts also it is looking strong. If I'm not wrong, Aamar has also picked this bank, so definitely watching out on Federal Bank as how it pans out for investors.
Absolutely, surely we are keeping an eye out on that, and you're right, Aamar has picked up Federal Bank as well. Aamar, are you giving it a thumbs up as well, and you're expecting this run up to continue?
Yeah, I would say that Federal Bank definitely is very strong on the charts, and also we've seen some long build-up happening there for quite some time. So that really tells me that there is more in store for the stock, and the stock has been a slow and steady mover, and once sustaining above the 180 levels, the stock definitely has the potential to rally towards the 215, 220 mark. And also most of the technical indicators from an intermediate term, long term as well as short term, they continue to remain strong and bullish. So clearly indicating that there is more steam left in the stock.
All right, then that's about Federal Bank. We're moving on then, and Janay, take us through what's happening with Ratnavir Precision.
Well, so the company came up with its Q1 update. If you look at the domestic and export business, they posted about a modest uptick in underlying volume growth on sequentially. Also, the value-added products such as clips had a soft start to the year, is what company is saying. If we talk about the international-based business, it also delivered a moderate growth sequentially. Company also received a substantial order for its wholly owned subsidiary, which is in Dubai. Now, the company is also raising a fund up to extent of about 95 crores. And going forward outlook, the company has said that they are expecting the revenue trend going upwards for the year on the back of improving domestic volume trajectory and higher realizations. And if you look at the chart, the stock is trading up about 3%.
Okay, surely keeping an eye out on Ratnavir Precision. Let's move on to the next one. And Aamar, you've picked out a large cap IT. Firstly, you spoke about KPIT Tech, now it's Wipro. So what's the word on Wipro? Something similar to KPIT Tech or a different story?
I would say if you look at KPIT is trading at record highs, but Wipro is still far off. So, and what we are seeing on the charts per se, on the intermediate term trend, Wipro is also gaining steam and momentum. And once the stock reached the 480 levels, currently it's around 560 odd levels, and recently it has breached its February highs, which was around 550 levels. So that has been taken out, and the stock was in for some consolidation over the first week of July. So that level has been taken out, and that's on significant volumes. Having said that, if you look at the long-term structure of the chart, that continues to remain strong and positive. So the key here for Wipro is sustaining above the 530, 550 zone. That's going to be very important. Sustaining over that level, the stock has a potential to rally, because if we look at the long-term charts, the stock has a potential to rally towards the 620 levels, which was the earlier highs made in March of 2022.
Right, then that's about Wipro. But moving on, let's shift focus to what LT Food is doing, because all these rise counters were also in focus in the recent while, where the company did announce that their step-down subsidiary, that is LT Foods UK Limited, has inaugurated a new state-of-art facility in United Kingdom with the existing capacity of 60,000 tons of rice per annum, and that's the news flow. They are on the expansion spree, and hence we are seeing the stock also holding on to the gains of around 3.5% in trade right now.
Okay, surely keeping an eye out on LT Foods. Let's move on to the next one that we have is Z Entertainment. That stock is buzzing in trade and actually leading up gains for overall the Nifty media as well. Now, when you're looking at it, Z Entertainment, 7% uptick, 6-7% uptick is what it's managing. Why? Because the board will be mulling fundraising plans going to be next week. It's on 16th of July that we are watching out for the fundraising plan. What happens on that front is something to watch out for. Obviously, the merger with Sony, that is something that is out of the way for a while now, but surely the fundraising plan around 2,000 crores is what I believe they're going to be eyeing. So keeping an eye out on all this as well, and where will they be utilizing the money and how the funds are going to be raised is a key factor to watch out for Z Entertainment. 16 July, an important date there.
All right, all eyes on Z Entertainment. We're moving on. Amar, let's talk about GMR Power. How is this stock placed technically?
I would say if you look at this particular stock, the stock is in a very secular bull trend, and the stock, I would say if we go back in time exactly a year back, the stock used to trade around 16, 17 and currently it's around 103 odd levels. And also what we see here is that on the long-term charts, the momentum has been building up once the stock started trading over the 60 and 80 levels. And even the intermediate term trend, we've seen a sharp build-up in momentum. Volumes have been heavy or more than average. The delivery quantity has also been there. So the factors and one of the technical indicators which clearly tells us about the trend strength, that is also displaying trend strength both from a short-term as well as an intermediate term perspective. So that tells me that there could be more upside to the stock. The stock could rally towards 118, 120 levels. And immediate support for the stock is around the 90-92 levels.
Out on GMR Power, more of an upside. 120 is what one could watch out for. But on that note, we're going to sip into a very short break. 9 stocks down, many more stocks coming after this break.
Welcome back to Market Fatafat, and let's keep it going with all the buzzers in trade right now, and let's shift focus to the top gainer in Nifty 50, and that is indeed TCS. What a move after the earnings. But let's go across to Gaurav to understand that what was actually surprising in the numbers and how the brokerage is looking at it after the earnings.
Brilliant. When we talk about TCS, it came up with their Q1 updates and it looks like they have come up with the strong numbers. Revenue and PAT was actually above what the street was expecting. When we talk about margins, that was in line with what the street was expecting. And lastly, what the commentary that we have picked from the results is that BFSI continued to decline while manufacturing led growth in this quarter. The attrition also was at 12.1%, which was lowered by a sequential basis, and headcount addition was also at 5,450, which was earlier we have seen this declining for the last 3 quarters. We also spoke with the management of TCS, where they said that they're expecting improvement in the entire segment post-election clarity in the US. They do not see any kind of stress in the execution of the current order book, and lastly, they are also in the process to negotiate with the mega market making deals. When we talk about brokerages also, they have also been bullish on this stock. JP Morgan recently has hiked the target price to 4,600 rupees post the results because they believe that the margin levers are in place for the stock. We also saw Jefferies actually upgrading the rating rating to buy, and also increasing the target price to 4,615 rupees, because they believe that TCS actually offers a value when we compare it with Nifty on the back of the valuations. We also have CLSA, who maintain hold rating but hike the target price to 4,007 rupees, because they believe that from here on Gen AI pipeline growing is going to be a little something that we need to focus on. But definitely we are seeing a strong movement coming up in TCS. In fact, in all the IT stocks are buzzing today, and if we specifically talk about TCS, that is up 6%. So definitely watching out on this counter.
Okay, surely keeping an eye out on TCS, but we also managed to speak to the management of the company, and they're sticking to the guidance of a better FY25. That's the word that came in from the CEO, Kirtivasan, and he also mentions that the company is seeing good growth in all the verticals and geographies. Listen in.
You know, the good news for us is all the industry verticals have grown, and almost all industry verticals and all geographies have grown. That's the first positive sign we want to look at. And we are also seeing from the growth perspective, it is both kind of projects. We are seeing good growth in discretionary project as well as in the, when I say growth, the cost optimization, definitely there's a growth. Discretionary project is a status quo. So overall, we are in a happy situation with the results that we have got. We have said that we believe FY25 will be a better year than FY24. We stick to that. We are not confident enough to call that things of the market sentiment has changed for good at this.
All right, then let's get back to the other buzzers then. And Aamar, let's talk about IFCI. This is the stock that you have picked up. Tell us more. How are you looking at, and what are the targets that you're looking out for?
Yeah, I would say that IFCI has been a stock, if you look at from a long-term perspective on yearly charts. So the stock really hadn't been doing much since, I would say, the last 10 years. But what we've seen that the stock, once it started sustaining above the 30-32 levels, it has turned out to be a multi-bagger. Currently, it's around 71, 72. Also, what we are seeing is that on the long-term charts, the momentum is very strong, and the trend is very strong. Even in the intermediate-term trend, we are seeing some strong bullish momentum. So now the stock has got some resistance around the current level. So I would say 72, 73 is going to act as a zone of resistance. If that is taken out, then the stock could rally towards first 80 levels, and if that's taken out, because the stock had made a high of 100 in 2008. So the way the stock is rallying, sustaining above 72, 73, we could witness a 10 to 15% rally, and sustaining over the 80, then the stock could really hit all-time highs. What we are seeing today is that the volumes have been phenomenally high, and that shows that there is definitely something happening in this particular counter.
Okay, that's a word coming in on IFCI. Let's move on and talk about Oil India then, and we are keeping an eye on Oil India on a back of a brokerage note, where Morgan Stanley is maintaining their overweight rating, hike the target price to 663 rupees from a previous target price of 497 rupees per share. As of now, the stock is trading with an uptick of almost 5% at 578. This is the highest target price that we are seeing coming in from all the broking houses. While why Morgan Stanley has turned bullish, or what is keeping them so upbeat on it? The gas production is doubling, tripling of their most profitable fuel refinery in Asia, and 38 years of hydrocarbon reserve life monetization, as well as the 14% in terms of operating cash flow, is something that is exciting Morgan Stanley. Now, other than that, all this in 4 years and at a single-digit multiple is what they are watching out for. And another standout factor for them is the 20% increase in gas ASPs over the years, as a new wells are being drilled, will extend the growth for the company. Good dividend distribution, earnings set to double by 2029. So everything seems to be in the right place according to Morgan Stanley for Oil India, and that's what's keeping them upbeat. And they say that this is an appreciated stock as well. So 5% uptick for Oil India.
All right, then moving on, and let's shift focus to SR Shipping and Aamar. All the shipping counters are sailing quite fast, and SR Shipping, is the stock already locked at an upper circuit? So how do you look at it right now? Any opportunity to buy in this particular counter, where it can take it to?
Yeah, I would say if we look at this particular stock, the stock is trading at record highs. The stock earlier, if you go back in time, so almost in 2011, it had traded as high as 40, and then it recently, I would say, as recent as 11th of June. So there was a major breakout. 10th, 11th June, there was a major breakout on significant volumes, and from there the stock has rallied by almost 50%, and it's still not showing any signs of, I would say, consolidation. It did consolidate for a couple of weeks, but again it has taken out the key zone of resistance, which was around 59.60. So sustaining of the 60 level, the stock could have a potential to rally anywhere between 10 to 15% from the current levels. What we are seeing is that on the intermediate term trend, long term trend continues to remain very strong. Short term, yes, we are seeing some sort of, I would say, indicators. Some of the technical indicators are pointing towards overheating in this particular stock, but the trend remains strong and positive. On the downside, it has got good support coming on the 54, 55 levels. Sustaining above 60 is something which is going to be very important, and likewise we are seeing significant volumes also on the days where the stock is witnessing breakout, so that also is a positive part.
That for those triggers there for SR Shipping. Let's move on. And Gaurav, ABB India is the stock that you picked out for us. I believe this is in focus on the back of a brokerage note.
Well, yes. UBS has another note on the ABB India where they have actually downgraded the rating to neutral from buy, but at the same time they have hiked the target price to 9,100 rupees versus what it was at 8,830 rupees. What they believe is that for company earnings are likely to remain supportive even here on. They also view ABB as the best exposure to emerging infrastructure and niche products across the conventional and new segments. They believe that there are two factors that will make them positive for ABB once again. The first one would be higher quarterly order run book, and the second one would be the robust margins in emerging portfolio. When we talk about run book order book for the quarter, the run rate beyond 3,800 crore rupees for mobility or higher base could actually grow the earnings from here on. And at the same time, what they actually believe is that from here on for the stock, there is limited room for growth when it comes to the share price, and that is why they are being a little bearish with their view on ABB while hiking the target price to 9,100 rupees. When we look at the stock performance also, that has declined almost 2.7% in a trade today. So let's see how it performs for investors of ABB.
Okay, surely keeping an eye out on that. But let's move on to the next stock then and focus on Aamar. You have picked out the next stock for us, which is IRFC. What's the word coming in on this counter? These counters have actually seen a very good run up, in the recent times. So now what's the view?
I would say most of these stocks have really performed exceedingly well year to date. If you look at IRFC has given almost 120% return. This week itself, the stock is up almost 16-17%. In the month, the stock is up almost 25-26%. And what we are seeing is that the stock did go in for consolidation, because in January it had made a high of 192, and then we witnessed some correction in the mid cap, small cap, and the stock had corrected all the way towards 115, 116. Then recently again the stock had made a high of 200 levels in the first week of June, and then again went in for consolidation, and now the stock has taken out that high. So earlier 190, 200, which was acting as a very strong zone of resistance, that has been taken out, and the stock is trading almost 10% higher towards 220 levels. Also, what we see is on the long-term charts, the trend is definitely strong and momentum is there. On the intermediate term charts also, we are seeing some of the technical indicators turning bullish. So now it becomes important that the stock needs to sustain over the 200, 210 level. Sustaining over the levels, the stock has a potential to rally towards 235, 240 levels. Now 200 should act as a very strong support for the stock.
Alright, that's about IRFC. But for this, it's time to once again slip into a very short break, viewers. Don't go anywhere. We'll be right back with more.
If you like this video, then like, share and subscribe to ET Now.